Hello, testing, testing. Just to check if you guys can hear me. Uh, yep. Can the attendees check if y'all can hear me? And please type in the chat if you guys can hear my voice. All right. Can you guys see my screen as well? Just to make sure everything's okay. All right. Great. Now let's wait for maybe a few more minutes before the rest of the attendees come in. All right, so just sit back, relax, and we will begin our session real soon. Okay, welcome for those that just joined. Maybe give it a couple of minutes, 2 to 3 more minutes before we start our session. All right. All right, so just to make sure, along the way, if anybody has any questions, just feel free to type it in the chat box and I will attend to your questions respectively. All right, so don't be shy, just ask me if you guys have any questions, all right? So today's topic will be pretty simple. It will be building your trading strategy, and we will be focusing on day trading. So the first series is scalping, and then the third series is swing trading. So the second series today we will focus on day trading. All right, so yeah, let's wait for maybe 1 to 2 more minutes before we can begin our session. Right, so hey everyone, welcome back to another webinar series brought to you by IronFX. Today we'll be focusing on building your trading strategy, part 2 out of 3, which is day trading. All right, so my name is Woon Hong and I'm an investment analyst at Rocket. So we are representing, we have collaborated with IronFX to provide you educational webinars as well as live trading sessions so you guys can be informed of the market situations and hopefully in the future, learn how to trade better. All right, so for the agenda, we'll be covering key news events. Secondly, we'll be covering referencing the higher time frame. Third, which time frame should you use for day trading? Fourth, identifying momentum. Fifth, taking the trade. And lastly, basic day trading techniques that I can teach you guys. All right. So firstly, key news events. So if you look at the economic calendar, one website that I would recommend would be Forex Factory. All right. So usually how I would do it is that on a weekly basis, actually on a daily basis, I will see what key news events that I will have to take note of. And just by looking at the impact, right, you can see that the red folded news are the ones that has the most impact and shows that the market will have a lot of volatility, right? So the price will start to fluctuate very often. Okay, so the first tip is to filter out orange and only the red folded news, so, as they are the medium to high impact news. All right, and the second tip would be to compare actual and the forecast data to determine the outlook of the news release. So an example that I can give you guys would be, let's say, for CAD, your CPI news, if the actual data is greater than the forecasted data, means that the CAD currency is strong. So any pairs that will has CAD behind, which is USD CAD, will fall, right? Because it is just a negative correlation. All right, so this is pretty simple. Okay, so what about referencing the higher time frame? Right, so let's jump onto the charts right here. Okay, so for referencing a higher time frame, right? Let's look at let's say Euro USD. All right, so let me just clear all the drawings. Okay, so for Euro USD, let's say I'm trying to day trade, right? So I'll be looking at daily, H4 and H1 only. All right, so but just by looking at these three time frames, right? Firstly, we'll look at daily. Let's see if Euro USD is on the uptrend or a downtrend. So we can see right here that price has started to make higher highs, right? And higher lows, right? So we can see that Euro USD is generally in a uptrend. So our bias should be buys. All right, so once you have your daily bias, and then you can start to head to the H4 chart. All right, so generally you will want to look for buys, right? So we'll start to plot out two different things. Okay, so the first thing would be your first support and first resistance. So let's draw this right here. If you were to mark out your support level, usually people would just mark out this level as a support level, right? But if you zoom out a little bit, you can see that price has also reacted all the way to here, right? We have a very nice support level here. Okay, then support has been broken and now is acting as a resistance. All right, and resistance has been broken, so it will act as a support right now. So this is a very strong level of overlap support level over here. So we'll mark this as our first support. All right, then you will start to mark out your first resistance. Okay, so for the first resistance, usually people would tend to look at this area right here. But if you look at this area, it was acting as a level of support, right? And it could possibly act as a level of resistance for price to maybe head up here and then fall downwards before you start to enter for buys. Okay, so this is generally your two, wait, let me just plot it out. All right, so this is your first support and your first resistance. All right, then what's next? You'll start to mark out your second support and second resistance. So obviously we can see right here, this will be a stronger level of resistance. Okay, and this shall be your second level of support. All right, so once you have marked this, oh, sorry, let's see, where is this in a different color? Yeah. Okay, so once you have marked these levels out, you can see that price will start to either break out of these ranges or react to these ranges. Okay, so this is what it means to reference higher time frames. Okay, and then to start marking out your key levels. All right, so any questions on this, you can just type it in the chat box. All right, then I will attend to your questions. All right, so next part will be which time frame should you use for day trading? Okay, so the three time frames will be daily, H4, and H1. So for daily is to look at your daily bias, right? Whether your buyer should be buys or sells. All right, then H4 and H1 is to draw out your horizontal key levels. So just these two things that you need to take note of. All right. So let's move on to identifying momentum. Okay, so how can you identify momentum? There are a couple of indicators out there that can help you to identify momentum or even find entries that are good, right? So we have firstly your MACD. Okay, so just a quick explanation on MACD. MACD uses 3 exponential moving averages to identify price movements, and the difference between these averages is shown in a histogram that I'll show you guys later. All right, so the movement itself can show whether a trend is strengthening or weakening. So we can see whether, just now remember I've showed you the daily chart, right? Whether it's still a strong uptrend or is going to become a weak uptrend already. All right, so MACD can help you with that. All right, but just something that you need to take note of is that moving averages always lag behind price action. All right, so it is more suitable for identifying your entry points. Okay, so how can you interpret the MACD? All right, so you can see that the blue line here on default settings in TradingView, right? The MACD line is the blue line right here, while the orange line is the signal line. And this is the histogram. The histogram is to see whether how strong the price action is at that point of time. All right, and then we have just the 0 line to separate the bullish and bearish histogram. All right, so how do you identify a selling signal using MACD? All right, so if the MACD line crosses over the signal line, crosses under the signal line, then we are looking for sells. All right, so let me show you guys the buy entry. Okay, so if the MACD, which is the blue line, crosses above the yellow line, then we are looking for buys, right? We can see right here, crosses over, so on and so forth, right? But just something that you need to take note of, you cannot rely on MACD indicator itself. You need to align it with your horizontal key levels as well as other confluences if you guys have. All right, so usually indicators by itself is not a strong indication of whether you should buy or sell here, but instead it acts as a support in your decision to buy or sell. All right, so for sell entry wise, MACD line crosses below the signal line, which is the orange line. All right, you see the blue line crosses under. All right, so with your key levels, okay, and if you have a confirmation that the price is weakening, right, then you can look for sell entries. All right, so 2 other momentum indicators that I could recommend to you guys would be RSI and stochastic oscillator. Personally, I don't really use stochastic oscillator, but I usually use RSI just for reference, because with the values above 70 is considered overbought, and then price might, once price is overbought, the sellers might hop in, right? So that price would tend to come down sooner or later. All right, so for above 70 is overbought, and values below 30 is considered oversold. All right, so we can see right here, if the RSI value is above 70, we can see that the price may be overvalued and is due for price correction. Price correction meaning that if price has been going all the way up in the uptrend, we can see that price will come down sooner or later. All right, indicating a sell signal. Okay, so for the RSI value, when it's below 30, it suggests that price may be undervalued and due for a price rebound. Price rebound meaning that price would tend to skyrocket once it reached a very low point, indicating a buy signal. Okay, so for stochastic oscillator, readings above 80 indicate that price is near a high and could come down sooner or later, while a reading below 20 indicates that price are near the lows. Okay, so this RSI and stochastic oscillator is actually very similar in a sense where it's either overbought or oversold. Okay. All right, so one thing that you guys could learn would be hidden support and resistance levels using your momentum indicators. Okay, so we can see right here, if you were to draw a dotted resistance line here, we can see that the stochastic oscillator has reached a value of 93.5. All right, so that is a, remember, right here, above 80 indicate that price is near its high. So 93.5 indicates that price might actually fall once it's reached a very high peak, right? So we can see right here, this is a hidden resistance level. So once price reach this point, price starts to fall immediately after. All right. So this is the hidden support level, right? We can see for the stochastic oscillator, we can draw a very nice support level right here, aligning all the low points when price is at this area right here. So once price reach this green line again, then we can look for entries to buy upwards. And we can see right here, let's say we bought around here because we see that it aligns very nicely with our stochastic hidden support level. And then price starts to skyrocket up right here, all the way to our take profit level. Yeah, so sometimes when you are able to identify such hidden support and resistance levels, you might be able to find a very nice entry for you to enter. All right. So next thing would be bearish divergence. Okay, so this is the first example of bearish divergence. Okay, so price is now testing a key horizontal level right here because we have 1 point of resistance, 2 points of resistance, and we are seeing if price could actually break this resistance level. If it breaks, then we need to look for bearish divergence because bearish divergence is that price has made a higher high on the actual chart and for the RSI is making a higher low instead. All right. So we can see right here, price has made a higher high, but on the RSI chart, we can see that price has made a higher low. Okay, so we can see that there is bearish divergence here. Okay, then there might be a chance for price to actually reverse from here. Okay, so we can see right here, price actually started to reverse almost immediately actually, once because we have bearish divergence. So why price reverse strongly is because firstly, we have horizontal resistance level over here, plus RSI resistance, which is this line over here, okay, plus your bearish divergence confirmation. Okay, so we can see that RSI has also reversed very strongly. So if you are able to master this, how you can catch bearish divergence is actually pretty strong. All right, and it's more effective on the H4 and H1 timeframes, right? It might be a little bit insignificant on the lower time frame from what we have tested so far, right? So H4 actually works the best along with H1. Okay, so that's something that you can take note of. All right, so the second example for bearish divergence would be, we can see, remember, bearish divergence is higher high on the actual chart and then higher low, right? Sorry, not higher low. Yep, right here you can see a high and then a low right here for this stochastic. So not only just RSI, but stochastic indicator as well. All right, so you can see right here, after that, price starts to drop. Okay, then once price created the same exact pattern, okay, then we can see that there is bearish divergence right here because higher high and then high right here and then a low. Okay, so this is also your hidden resistance level, as I mentioned previously. All right. Okay, so for divergence, okay, always take note where the bearish divergence has started, as this is the level where it would tend to reverse to. Like, not a lot of people know this parameter of the stochastic. Okay, let me just show you. Okay, so we have a question. what is the parameter of the stochastic? Okay, so let me just okay, if I were to do this, let me hide the RSI. Let's focus on the stochastic. All right, so this is the technically the default settings of the stochastic. Is fine also, right? You can use the default settings. Oh, wait, let me see. Yeah, so you can use this as well. 21, 3, and 3. All right, so don't adjust too much of the indicators, right? It may actually affect how it appears on your chart, and it might actually affect your decision. All right, so Shem, maybe you want to take this down, right? And let me show you the RSI. Wait, let me see. Yeah, this is the standard one for RSI. The length is 14. MA type SMA, okay, MA length 14, and standard diff is 2. All right, so this, I believe this is the standard settings. All right. Okay, yeah, you're welcome. Okay, let's move on. Let me see. Okay, so yeah, as I mentioned, always take note of where the bearish divergence started, as this is the level where it would tend to reverse to. All right, so you can see if this is the point where it actually started, right? You will mark out this area, and then you can see the high. Once you created the high, price might actually start falling from here, right? So you will draw a key level right here. Okay, and if you go to the next slide, we can see that price actually, once it came down, it came down to the point where we had our key level right here, right? Price reversed to where the divergence started to occur. This was something that I didn't know as well. And yeah, so this, I actually realized that it does come down to the level where the divergence started from. All right, so this is just a fun fact for you guys to know. Okay. So forecasting of breakouts, right? So if we are looking at a uptrend, and then once we see that there is bearish divergence, okay, so this is for bearish breakouts. Firstly, we can see that the RSI actually broke the ascending support line before the actual price did. So this forecasts that price might break this ascending level of support. Okay, so price is barely breaking out of the ascending support line, but shows strong recent bearish divergence versus RSI. Okay, so we can see that there is strong bearish divergence present, and since RSI has already broken this ascending support, there might be a chance where price could break this ascending support. Okay, so we have RSI breakout. So that is your first confirmation. Your second confirmation would be bearish divergence. And lastly, price breaking out of here. Okay, so we have a high probability bearish breakout. So if we look right here, price actually broke out of this ascending support line. Okay, retested it, and then went all the way down, along with which is similar to the RSI. Okay, so with this combo, right, this is a pretty good combination. We have RSI breakout plus your bearish divergence, as well as price starting to show that is weak on the uptrend. All right, another tip, excuse me. So another tip that I can share with you guys to how to identify whether a very strong uptrend is or very strong downtrend is weakening would be that if you were to look on the H4 time frame, right? If once price never ever go against a trend when price creates such engulfing candles, you will only, like, people will start to buy here. right? Some people will see that, oh, this is a valid level of support, but we are currently right here on this candle with such a strong bearish candle. Never ever go against the trend. If you want to, I would suggest to enter the breakout of this candle for continuous sells, right? Until it reaches the point where it creates such candles whereby we have a small correction, okay? And then it starts to have weaker candles, right? It shows a lot of wicks right here. And then if we were to zoom out, let me see if I can find a proper level. Don't really see a proper level. One proper level will be right here. Right? But if I were to look at it right here, no, this to me, this is not really a proper level. So I wouldn't find any entries right here. But how to tell whether a trend is going to be weak is that once we have a shift in market structure, which is this level right here. Okay, once we have a shift in market structure, then I will start to try and look for buys. Okay, so don't let's say this is not a good level to buy outwards as well, right? Because we are still in a rather strong bearish momentum. So my advice would be to go with the trend and never against the trend. Okay, so a lot of people make that mistake of going against trends when they just start or when they are not too sure about the markets, right? They will see that every low they will start to buy, right? Or every high they will start to sell. But if you were to look at the trend, right, we have such strong candles right here. Okay, focus more on price action rather than um these levels right here. Okay, so you one tip would be to look out for such strong candles and then trade along with these strong candles. And if you see that we have weaker candles right here, okay, then you start to look for buys, right? Okay, let's move on. All right, so next thing, yeah, we can see that price broke and dropped strongly. Okay, so what about bullish breakouts? Okay, we can see that RSI has started to break out of the descending resistance, but on the actual chart, we can't see anything yet. All right, so when do you know you should enter a trade? All right, so once we see that, firstly, price is now testing the descending resistance line, and we are wondering if it would break or if it would respect this descending resistance line. Okay, so but on the RSI, we have the descending line breakout. So more often than not, once RSI shows you that price has already broken out of this descending resistance line, price might actually just break out of this resistance line. All right, okay. So we can also see that we have bullish divergence, okay, because price is making lower lows and we have these lower highs. Okay, so recent bullish divergence suggests that we could see a strong reversal, okay, to the upside. So next slide, we can see we have a successful breakout of descending resistance line as forecasted by the RSI. Okay, so that's why we can use RSI to forecast price movements either to the downside or to the upside. All right. Okay, so before I move on, anybody have any other questions? Just to make sure that everyone is on the right page. Okay, if there are no questions, I shall continue. Just feel free to type in the chat box or type it in the Q&A section so that I can read it out to the rest of the attendees as well. All right. Do you have limitation on the level of RSI or stochastic with the divergence? Okay, limitations. Sorry, I don't get the question. What do you mean by limitation on the level of RSI or stochastic with the divergence? Limitation. Oh, okay. I think in which you mean you mean the value? Is it for example, if you're talking about RSI, is it the value? Oh, okay. So let me just show it to you. Okay. All right. So remember for RSI, right? We can see that if it's usually once it's close to 70, right? And if it shows a breakout, then I will look to sell because all right, firstly, we have confirmation that price has already broke out of the ascending support right here for RSI. Okay, and price and the value for RSI is actually 60 about 60 close to 70, right? So my range will be 60 to 70 for sells. All right, and then for if you're looking for buys, right, will be right here, will be 20 to 30. All right, so this is a good, I would say a good range for you to gauge, but don't count on the value too much, even though remember, previously we have a slide whereby yeah, above 70 considered overbought, so people would tend to sell, right? Then values below 30 is considered oversold, then people will start to buy, right? So but these values is just a gauge, right? It's just a range. But I would say it's more important if you can see the breakout rather than following the values. Yeah, so for myself, I would see like don't have to be exactly 70 if you are looking for sales, right? Maybe 60-ish, 60 to 70 is a good range to look for sales. And then for buys would be 20 to 30. All right. Then for stochastic also, I would take about 70 to 80 for sales. All right. And then for buys would be maybe 20 to 30 as well. Okay, so I hope that answers your question, John. All right, so Shem has a question as well. The best time frame to look for divergence. All right. So the best time frame, okay, in from what I have tested, so far would be H1 and H4. Those are the ones that actually work the best for personally. All right, so yeah. So based on previous testing out of divergence, because I didn't really use divergence last time, but I realized that divergence could be a good gauge to look for reversals. But for myself, my trading style is that I tend to follow the trend rather than trade reversals. But if you are looking for the better time frame to look out for divergence would be H1 and H4. Yeah. So I hope that answers your questions, Shem. Yeah, you're both welcome. All right. So let me just move to the yes. Okay. So I have come up with the step-by-step how you can take note of these steps to make sure that you follow it on a daily basis and then train yourself to follow strictly based on these rules. Okay, so let me just go through it with you guys so that you are able to practice once we end the webinar, and then you'll be able to become a better trader. All right, so how I usually day trade is very simple actually. So firstly, we will look at news events such as NFP, CPI, or any interest rate announcements. All right, so the important ones are your NFP, CPI, your wait, let me just show it to you all. Let's go to Forex Factory. Okay, then we shall look at some of the news. Okay, then we have CPI, see rate folded news. All right, so imagine yourself just looking at this on a daily basis, right? Let's see what we have for the day. All right, so today is Wednesday. All right, so AUD CPI has already passed, right? So we don't have to focus on that. Let's focus on what is next. So the next one would be this Richmond Manufacturing Index, right? But it's orange folded news. So I don't think that it will actually affect the markets that much. So I can just trade with ease, all right? But if it were to have a red folded news, right, then I would have to be more careful during that period of time. All right, so always be more careful when it is red folded news. Okay, so yeah. All right, so the first most important thing is to always see if that day itself, when you're intending to trade, is there news, is there red folded news? All right. So if there are, you need to be careful during that time frame. Okay. So the next thing, right, for day trading, remember previously we mentioned H1 and H4. Your daily your daily time frame is to look out for daily biases, whether your bias is to buy or sell. All right. So remember just now previously, we went to H1 and H4. All right. Using this Euro USD example again, we are plotting out our first support, first resistance, second support, and second resistance. All right. So once we have plotted these areas, we are looking for entries. All right. So if you were to look at the daily time frame, okay, we are looking for buys. All right. So ideally, what I'm looking for will be to buy at this area right here. Okay, but the timing right now is not very ideal, so I might wait for New York session, right? Starting from maybe around 9:30, where I will look for entries. Okay. So let's zoom into H1. Okay. So if I were to look at H1, I'm in the middle of nowhere. So there is no way that I will look for entries right anywhere near here, because it doesn't make sense, right? If you guys agree with me, it doesn't make sense to enter anywhere in this area, right? We have no key levels, we have nothing, right? So let's just trade on our key levels, all right? So if you were to trade a, let's see. Okay, since we have someone that asked for gold, let's go for gold, all right? So let's see gold. Oops, okay. Okay, remember, first step, let's see. Let's start off from the beginning, right? We have no USD news, so we're fine, except for this one. So we might need to be a little bit careful. Okay, next thing, draw out our H1 and H4 analysis. Okay, so right here, this could potentially be a very nice support level. Okay, first support. All right, where is our first resistance? I would say, well, this is a little bit far. That is about 200 pips. Yeah, it seems fine. Okay, first resistance. Okay, where is next? This might be our second level of support. Okay, and then we have our here. Second resistance. All right, so we have plotted out everything. Let's see. Okay, so this level, I would say for gold, if price doesn't break this level of support right here, we are good for buys. Because why? We can see that price has started to create higher highs, okay, and higher lows. Okay, but we don't want price to break this low over here. All right, and if I were to go to H1, okay, I would say that price might actually come up. This might be a good position to long, right? And maybe a stop loss could be placed below right here, and then your target would be this area right here. All right, very nice. 1:3.72, but we already missed the ideal entry, which is right over here. All right, so let's see if I were to go to the low time frame. Yeah, it will fluctuate a little bit, and then price might actually go further up to break these highs over here, right? Because price has really broken this high, and what's next? It might actually be this high right here. So that is what I'm looking for. But we should wait for the hourly candle. We should wait for this candle. We should wait for this candle to close. All right, see if price managed to break this low or not. Okay, if price doesn't manage to break this low, then we are good to go. All right. No, let me see. Okay, so next, once we have identified our key levels, identify momentum through trend lines, Ichimoku cloud, or channels. All right. And if H1 and H4 are following the same trend, it will act as further confluence. All right. So let me just show you guys. So let's see what we can see. See right here. Okay, I don't see anything so far. Okay, this is our hidden resistance. Okay, let me see RSI. This might be our, yeah, this might actually be our hidden support. Okay, if price comes down here, right, so far, you see right here, price, wait, let me zoom in. Okay, you can see that price is now at a support level on our first support right here. But if you see on the RSI chart, it's still in the middle of nowhere. Its value is 32. All right, 32, I would say, is a good gauge to maybe look for buys. But I'm hoping for price to maybe come down to this level of hidden support right here, right? We have a very nice hidden support level. So if price actually comes down to our hidden support level, then I will look for buys, right? But in my opinion, I think this level is a good buy area right now because we are expecting for price to create new highs, right? If we were to take a look at the H4 chart, we can see that after this very strong downward movement, we need a correction, might need a correction to the upside, something like this, before it start to come down a bit. Because as of this moment, gold is actually still pretty high, and gold might have a strong correction. All right, so this is what I'm looking at for gold. All right, then let's see what's next. Okay, also we need to take note of proper entry, SL and TP management based on placing your stop loss beyond and TP before an important key level. What we mean by this is that, right, if you were to enter for gold, right? Previously, let's say we enter right here. Okay, so where should our stop loss be? Since we have first support and second support right here, all right, for myself, I wouldn't place my stop loss so far back. I will only place my stop loss to give it more space, maybe below this low right here. All right, it's still about 78 pips. But for me, my max would be 50 pips for gold. All right, so I'll place it below this low. If price actually comes down, break this low and breaks this low, it will come down to create take out the lows right here. So there's no point for me to put my stop loss that low. But of course, right, why I place my stop loss not on here, not here, but slightly below, is because we don't want price to come down. We don't want price to come down, tap our stop loss and go up, right? This is something that we want to avoid because price might actually tap this level and go up. So we need to give price space to breathe. All right. And as for our take profit level, right, for me, usually 1:2 is a good gauge. So right here, okay, if I were to go to the lower time frame, I could see that price might show a little bit of reaction right here, right? Because there was once a support level and could act as a resistance right here. All right, so this could be my target for gold. All right, then if price reach this area, I start to close maybe 50% of my position. All right, then I will extend my take profit level to this level right here. Always put your TP levels before it reaches a certain key level, right? So you might want to put it before, and then if your stop loss, let's say if your key level is right here, you want to place your stop loss beyond rather than on the dot itself. Okay, so this is something that you have to take note of because I'm sure many times there have been situations whereby price actually come down, take out your stop loss, and then went in the direction that you were aiming for, right? So give price space to breathe. All right, and then for take profit levels, don't put it right where your key levels were, but place it slightly before so that you are able to hit your take profit level before price goes against you. Okay. All right, so why not let's just go through some pairs that you guys want me to go through with you. All right, so since we have like maybe 10 more minutes, all right, so feel free, just type in any pairs that you guys want me to go through with you. All right. Oh, before that, before that, there are basic day trading techniques that I will have to go through with you guys as well. So the main one that I always emphasize would be to follow the trend, because just remember this, the trend is your friend until it bends, right? So anyone who follows the trend will buy when price is rising or sell when price drop. So this is done on the assumption that prices that have been rising or falling steadily will continue to go in the same trend. So contrarian investing means that you are a person that you are basically a person that takes more risk and you are trading the short-term reversals. All right, so yeah, so I would suggest to follow the trend rather than doing contrarian investing. Okay, so lastly, trading the news. So some people use this strategy. So they will buy when good news is announced. For example, if your CPI is good, right? Then you will tend to buy pairs like USD JPY. All right. So this can lead to greater volatility, but can lead to it's a very risky move because you can either profit a lot or you can lose a lot as well. All right, so yes, so that's my session, but let us go through pairs, right? So let's go through USD JPY, USD JPY. Okay, so Scarlet, right? So for USD JPY, for myself, like USD JPY is not looking very ideal right now, because let me take a look at GBP JPY. Yeah, as you can see right here, GBP JPY has been in a very, very, very strong uptrend since pretty long, right? Since the start of May. Okay, and he has broken these highs right here. Okay, so taking reference into USD JPY, let me see. Okay, let's start off with our H4 analysis. Okay, so let me see. Okay, this might be a good support level to buy from. Right, this might be a good support level. Oh wait, sorry. Here might be a good support level, but it is not strong, right? It is not a very strong support. So I will label this as a dotted support line, which means that price might actually just break past. Okay, but I believe that it would start to continue its trend. Okay, let me mark this out first. This could potentially be my second support. Okay, then this is our first resistance. Okay, this is, oh, our second resistance is pretty high. Okay, so once I have marked these areas out, right? Let's see. Okay, let's try to use projection to see. Yeah, let me see. Yes, okay, there might be a possibility. 61 and 161. Okay, so when I use Fibo projection, right? Price aligned with my first resistance level. This level aligns with the Fibo 61.8% Fibo projection. So there might be a chance where we could take short-term buys upwards, but the risk to reward is not very good, right? If I were to, let's say I were to take a long right here, right? My stops would be placed rather maybe 30 pips, right? And my target is not a very nice RR right here. Of course, my target would definitely ideally be right here, but I don't really have high hopes for UJ because it's rather messy right now. Although it has been somewhat respecting the levels of support and resistance recently, right? But I wouldn't enter right now. Okay, so you could possibly take a risky entry, right? And then your stops, I would say, put it at about 20 pips, right? And then your first target would be this level of resistance right here. Okay, but this is a very risky trade, and I wouldn't recommend doing so. If you were to take a look at the 1 hour time frame, it looks decent. It looks decent for buys, right? Because we have multiple rejection wicks over here. If you were to go to 15-minute time frame, let's see. Yeah, it'll be rather risky. Yeah, so Scarlett, you will have to take note of that. For myself, I wouldn't want to enter UJ as of right now. Let's take a look at maybe GU. Let's see. GU. GU is rather messy too. Oh yes, wait. I could possibly find. Oh, nice. Okay, so this is a very nice example of divergence. Okay. Yeah, sure. Yeah, so I found an example of divergence, right? We can see right here, we have a higher high created, right? But on the RSI chart, we have a higher low. Okay, so this is our bearish divergence. Okay, so that's why it price actually came down. All right, so yeah, practice divergence and you'll be able to realize that divergence is actually useful. All right, so let's take a look at oil. Okay, let me see. Oh, oil's price is pretty high. Oh, okay, nice. Let's see. Okay, broke this high, so we are in a uptrend right now. Okay, so this might definitely, this could be my level of support. Okay, where is my level of resistance? It's right here. Common point, level of resistance. Okay. This could be another level right here. Second level. Okay, support doesn't look that nice, but see here is rather far, but okay. Okay. Let's see. Uh, oh, you already broke. Okay, I tried to draw a extension, but you already broke 161.8. So the next level I'm looking at would be showing some rejection right about this area right here. Bearish circle. Okay, so once price reach this area, we can expect fluctuation either here and then come down to this area or continue to the upside here. All right, so for oil, the only areas that you should look at for sells would be either here or here. All right, but let's say price, you can look for short-term sells to here, and then you continue to buy upwards to this area right here. Okay, so that is for oil, right? If I were to draw, maybe let's see if I can find a Fibo. Oh, wait, let me see daily. Yes, it should be 7. Interesting. Yep, price is very strong now, so I would suggest only looking for buys. All right. Let me see, because I'm not able to draw any Fibo, it just gets broken. Let's see. Draw here. 1, 2, 1. Yeah. Okay. What I could possibly look at would be to take a sell right here. Stops placed above this high, target right here. Okay, so that is your ideally your first trade. All right. Your second trade that you can look at would be probably to long right here. Your stops, but you see right here, your stops, you're unsure of where you should put it, right? So I might actually look for the sells back to this level before I look for the buys. Okay, I hope that answers your question, Scarlett. Okay, so that is the end of our session. I hope you guys learned something new and practice how to day trade. All right, and remember the things that I've taught you guys, so it might come in handy in the future next time. All right, so thank you all for being so attentive and tuning in to today's webinar. All right, I'll see you guys next time. So take care and trade safe. All right, bye bye.